Welcome. In this video, XCN coin has received a reaction. Is the direction up? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. The most prominent structure on the chart is a descending trend line that has guided the price downward at a steady slope for a long time and is frequently referenced by investors. This line is drawn with a downward angle as lower highs are formed over time and generally symbolizes the prevailing selling pressure in the market. Whenever the price approaches this line, sellers step in and push it back down. This indicates weak buying interest in the market and shows that investors are engaging in selling either for profit-taking or out of fear of losses. However, these descending trend lines do not last forever. Eventually, buyers begin to gain strength, selling pressure weakens, and the price approaches the trend line again. At this point, a critical threshold is reached. Because this line not only indicates the direction of the price but also serves as a psychological barrier in technical analysis. If the price manages to break above this descending trend line, a fundamental shift in market psychology occurs. In other words, control shifts from sellers to buyers. Such descending trendline breakouts are often signals of major reversals in technical analysis. Especially if the price has respected this trend line for a long time and pulled back with each touch, breaking this line generates a very strong signal, both visually and psychologically. This indicates that the price is no longer making lower highs, buyers are gaining strength, and selling pressure is beginning to fade. At this stage, the first factor to watch after a trendline breakout is volume. If the price breaks the descending trendline to the upside and volume increases simultaneously, the breakout becomes even more meaningful. It shows that investors are not only witnessing a change in price direction, but also seeing strong market participation to support that move. Volume-supported breakouts are often signs of more sustainable trend reversals. Another important aspect to monitor after a trendline breakout is the possibility of a retest. After breaking the descending trendline, the price may return to test this line again. This test is generally seen as confirmation of the trend change. If the price holds this level and begins to move upward again, it indicates that the downtrend has ended and a new uptrend has begun. At this point, the principle of broken resistance becomes support, comes into play, and the new direction of the price becomes upward. Additionally, in technical analysis, there are many examples of sharp and sudden rallies following such breakouts. This is because investors closely monitor trend breakouts both visually and strategically. Therefore, when a descending trend is broken, a large number of buyers may enter the market at once. Especially algorithmic systems or investors with buy orders set at technical levels may react to this breakout, increasing buying pressure in the market. This can lead to rapid upward momentum and a pump-like move in a very short period of time. However, it is important to be cautious of false breakouts during this process. In some cases, the price may briefly move above the trend line, but if volume is insufficient or macroeconomic conditions are unfavorable, the breakout may not be sustained. These types of false breakouts can mislead investors and trigger stop-loss levels. Therefore, it is crucial to carefully analyze the price action following a trendline breakout and check whether the break holds, particularly through closing prices. In conclusion, although the descending trend structure observed on the chart has exerted long-term pressure on the market, the price approaching this line again, and the potential for a breakout is highly significant from a technical perspective. If the price manages to rise above this trendline and hold there, it will signal a change in market direction and open the door to a new uptrend. This will lead buyers to act more boldly and encourage broader participation in the market. Therefore, this breakout is not only technically significant but also a major psychological turning point. But we can't rely solely on trends for analysis. Let's take a look at other metrics as well. Stay tuned. One of the most notable developments on the chart occurred when the price reached a long-followed and historically strong support zone. After the most recent touch to this level, the price halted its downward movement and showed a clear upward reversal, signaling a potential shift in market dynamics. This support level has been tested multiple times in the past, with buyers stepping in each time to push the price upward. Therefore, in technical analysis, such frequently tested support levels are highly significant, as they represent not just areas where the price pauses, but zones of strong buying pressure. Looking at the most recent price action, there is clear evidence of strong buying interest emerging from this support zone after the decline. This proves that the market still respects this level and that buyers are concentrated in this area. Notably, the decrease in volume during the decline, followed by a surge in volume right as the price met the support level, suggests that the buying interest is organic, rather than speculative. In technical analysis, such volume-backed support rebounds often signal the beginning of a strong medium-term uptrend. Support-based reversals are more than just a horizontal line, they also represent a psychological threshold. Since investors have previously bought at these levels, they tend to reopen positions when the price revisits this area. Additionally, prices bouncing from this level may cause many traders to adjust their stop-losses, close short positions, or even switch to long positions. This in turn contributes to further upward momentum. Now that the price has reversed upward from this support, it generates a short-term positive signal. However, for this reversal to be sustained, several technical thresholds must be surpassed. Chief among these are the local peaks and interim resistance levels formed during the recent downtrend. If the price can break through these as well, we can confirm that the bounce from support is not just a short-term reaction, but potentially the start of a new uptrend. Another critical point to remember in technical analysis is the nature of the price action after a bounce from support. If the reversal is weak and lacks volume, the price may soon retest the support. However, if the bounce occurs with a strong candle and increasing volume, it indicates that buyers are indeed strong in this area and that the upward move may continue. In such cases, the price's first target is typically the previous high. If that level is broken, resistance zones in higher time frames may come into play. Another strategy investors should focus on during such support reversals is risk management. After the bounce from support begins, any positions taken should include a clearly defined stop loss. This stop loss should be placed slightly below the support level to minimize losses in the event of a false reversal. Similarly, profit-taking levels should be set in stages to maximize gains from the upward move. Finally, price reversals from support zones have implications not only for the short term, but also for medium and long-term analysis. These types of reversals can break trend structures and lay the groundwork for the start of a new trend. Especially when a long-term support line has been tested and results in a strong reversal, this can signal the beginning of an uptrend that lasts not just for days, but potentially for weeks. In summary, after reaching a key support level, the price encountered strong buying defense, which triggered an upward move. This technical development increases the price's upside potential and strengthens the likelihood of higher levels being tested in the future. If supported by technical indicators and volume data, this reversal could be more than a short-term bounce. It could signal a broader bullish trend. RSI is one of the most commonly used momentum oscillators, designed to measure the strength and momentum of price movements. Typically calculated over a 14-period time frame, RSI ranges between 0 and 100, and these values indicate whether an asset is in overbought or oversold territory. However, the strength of RSI lies not only in reaching these levels, but also in its ability to form trend structures that can be analyzed independently. Therefore, descending trend lines formed on the RSI can offer investors early signals regarding the direction of the price. In the current technical outlook, a clearly defined descending trend structure has been observed on the RSI indicator for an extended period. This structure occurs as each attempt by the RSI to rise falls short of the previous peak, reflecting an underlying loss of momentum in the price. In other words, even if the price moves sideways or slightly upward at times, the descending pattern seen on the RSI suggests that buying pressure is weak, and sellers still hold control. These types of descending RSI trends often run parallel to downtrends on the price chart. But the key point is this: RSI typically moves ahead of price. So, a trendline breakout on the RSI can signal an upcoming upward move even when the price has not yet shown clear bullish action. In this context, the descending trend line on the RSI is significant. A breakout to the upside from this line often leads to strong upward momentum in the price as well. RSI trend breakouts are especially reliable when supported by volume. If the RSI breaks its trend line to the upside, while a high-volume candle forms on the price chart simultaneously, this is an extremely positive development for investors. This breakout confirms that buyers are gaining strength and that the price is signaling a bullish reversal. Therefore, a breakout on the RSI should not be seen as just an indicator move, but rather as a critical technical signal for the future direction of the price. Additionally, these descending RSI trendline breakouts often coincide with a technical setup known as bullish divergence. For example, while the price makes lower lows, the RSI starts to make higher lows. This pattern indicates that even though the price is falling, momentum is beginning to strengthen. If the RSI's descending trendline is broken during this time, it signals a strong reversal pattern and a potentially significant upward move in the price. We should wait for the RSI trendline to break. Yes friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.